Navigating the world of business today feels like walking a tightrope, doesn't it? On one side, you have the relentless push for profit, the need to cut costs, and the pressure to deliver results. On the other side, there's a growing awareness of ethical considerations, social responsibility, and environmental sustainability. It's a balancing act that many organizations are struggling to master, especially when it comes to standard costing. So, what exactly is standard costing? In simple terms, it's a management accounting technique where businesses assign predetermined costs to their products or services. This helps them make informed decisions about pricing, resource allocation, and profitability. It's been a cornerstone of financial management for ages, but as we dive deeper into this practice, we need to ask ourselves, are we doing it ethically? Let's talk about one of the biggest ethical concerns in standard costing: labor exploitation. Picture this. A company sets its standard labor rates at the absolute minimum, just enough to comply with the law. It's tempting, right? After all, keeping labor costs low can significantly boost profits. But here's the catch. Doing so often means paying workers less than a living wage. This isn't just a number on a spreadsheet. It's about real people, families struggling to make ends meet, individuals working tirelessly yet still living in poverty. Now, imagine the ripple effect of this decision. When workers can't earn a decent wage, it contributes to income inequality and wealth disparity. It perpetuates a cycle of poverty that affects entire communities. As businesses, we have a moral obligation to ensure that our standard costing practices don't just meet the bare minimum, but actually support the well-being of our workforce. So, how do we navigate this ethical dilemma? First, businesses need to conduct comprehensive market analyses. This means looking beyond the numbers and understanding the local cost of living, prevailing wage rates, and socioeconomic factors. By doing this, organizations can set standard labor costs that not only comply with legal requirements, but also provide a decent standard of living for workers and their families. Next, ethical sourcing practices come into play. Partnering with suppliers who adhere to rigorous labor standards is crucial. This includes ensuring fair wages, safe working conditions, and the prohibition of child labor. It's about creating a supply chain that reflects our values. Transparency is another key element. Organizations should openly disclose their standard labor costing practices and the steps they're taking to ensure ethical treatment of workers. This builds trust with consumers and stakeholders and demonstrates a commitment to social responsibility. Imagine a company that proudly showcases its ethical labor practices. Wouldn't that resonate with customers who are increasingly seeking brands that align with their values? And let's not forget about aligning incentives with ethical objectives. What if executive compensation was tied not just to profit margins, but also to achieving ethical labor costing targets? This would send a powerful message that profit isn't the only priority. The well-being of workers is equally important. Now, let's shift gears and talk about the environmental impact of standard costing. As businesses hunt for cost savings, the temptation to cut corners environmentally can be strong. Sourcing cheaper materials or outsourcing production to regions with lax environmental regulations might seem like a quick fix, but the long-term consequences can be dire. We're talking about resource depletion, excessive waste, and a significant contribution to climate change. To address these environmental concerns, businesses must integrate sustainability into their standard costing frameworks. This means conducting life cycle assessments to evaluate the environmental footprint of materials and production processes. It's about understanding how our decisions today impact the planet tomorrow. Prioritizing sustainable sourcing is also essential. Companies should establish procurement policies that favor suppliers with strong environmental credentials. This might involve using renewable or recycled materials or implementing energy-efficient production methods. By making these choices, organizations can significantly reduce their ecological footprint. And how about incentivizing circular economy practices? Imagine developing standard costing models that encourage the reuse, refurbishment, and recycling of products. This not only reduces waste, but also promotes a more sustainable, closed-loop business model. It's a win-win. Investing in green technologies is another critical step. Incorporating the costs of renewable energy, carbon capture systems, and advanced waste management solutions into standard costing frameworks acknowledges the long-term benefits of environmental stewardship. It's not just about immediate savings. It's about creating a sustainable future. Now, achieving ethical standard costing isn't something that can be done in isolation. It requires collaboration, transparency, and a commitment to industry-wide standards. Businesses should engage in dialogue with labor unions, environmental advocacy groups, and other stakeholders to develop best practices for ethical standard costing. This collaborative approach can help identify systemic challenges and foster a more equitable business ecosystem. Transparent reporting is crucial too. Organizations should proactively disclose the details of their standard costing practices, including methodologies and sources of cost data. This level of transparency builds trust with customers, investors, and the community while holding businesses accountable for their actions. And let's not overlook the role of government. Policymakers can shape the ethical landscape of standard costing by introducing tax incentives, subsidies, or regulations that encourage businesses to prioritize labor rights and environmental protection. It's about creating an environment where ethical practices are rewarded. In conclusion, as we navigate the complexities of modern business, the ethical considerations surrounding standard costing have never been more critical. Organizations can no longer afford to view their cost management strategies in a vacuum. The decisions we make today impact not just our bottom line, but also our workers, communities, and the planet. By integrating ethical principles into standard costing frameworks, businesses can uphold their moral obligations while unlocking tangible benefits, improved brand reputation, stronger stakeholder relationships, and enhanced employee morale. Moreover, ethical standard costing can drive broader industry-wide transformation, contributing to a more sustainable and equitable global economy. As we move forward, the ability to balance financial performance with ethical considerations will become a crucial competitive differentiator. So, let's embrace these strategies and best practices, positioning ourselves as ethical leaders in the business landscape. Together, we can navigate the complexities of modern commerce with a steadfast commitment to social and environmental stewardship. After all, the future of business is not just about profits, it's about making a positive impact on the world.